Welcome back to the Morning Call. We're going to go in the trenches with a new face to the Morning Call. Her name is Nicole Urken. I'm so happy to have you here. I hope that I pronounced your last name right?
Yes.
Okay, she is working with theStreet. She works very close with Jim Cramer at Mad Money, and she's also a Harvard grad. So yeah, I have to give her a little props here. Probably smarter than me. I'm from Albany. But anyway, we're lucky to have her. She's going to bring a new perspective to the show in the trenches, and then even more than that moving forward. So I'm just going to let her start and go take it away with the trenches here on Morning Call.
Well, it's great to be here. Thank you for having me. Today we wanted to look, now that the Jewish holidays are behind us and people are starting to pick out their Halloween costumes, with October and Q4, we want to already start thinking about holiday plays. And first off, we wanted to look at Federal Express within the transports. You know, this has been a tough stock to be in of late. It's had a big pullback since its quarterly announcement back on the 17th. And you know, fundamentally, its Analyst Day is coming up. It's a seasonally strong quarter. Again, holiday theme, more packages, more spending. It's trading 2 turns below UPS, about 4 turns below its historical average. From a trader's perspective, is this an interesting time to come in?
I think at this point, a lot of traders are looking at the support here because it's like basically bouncing off of it by a thread. So if you take a look at the chart here of FedEx, you will see that this has been in this long channel for, you know, almost like 7 months. So there has to be someone accumulating this. And every time it feels like the street's trying to give this, you know, company a pass, they come out and they pre-announce. So if you look here at the chart, you will see this is major support. I know fundamentally it might be trading, you know, cheaper to its peers, but sometimes it does that for a reason. As a trade, it's below every moving average. So until it really starts to get above these, I don't think there's going to be much, you know, momentum here. You know, so I do think actually if it does break below 83.92, some guys might actually even short it, or some stops can get triggered. I would say, you know, this level is a decent level, you know, versus the highs here. You know, this is another level underneath it where the gap is around 80, and then big support comes in right around 76. So I guess if you want to be in this name, I would be in very small, because it's trying to hold support, and you know, if you want to look at lower levels, here you go. And finally, if it does start getting better and acting better, if it starts taking back the moving averages, that's when I think traders will give it a little bit more attention.
Yeah, one thing that we looked at on Mad Money is that it's actually not too much below the level where it pre-announced earlier in the month. So with its Analyst Day coming up with a restructuring for its express business, it might be an interesting time to start a small position if you have a little bit more time for a longer term investor.
Exactly. Not everyone just hits keyboards all day long like I do.
Exactly. So I guess moving on to what might be in the packages, one name that I was looking at is Mattel, the largest toy maker. And actually this business is focused on girls' toys. So everyone knows Barbie. Another popular name for them has been Monster High, which I'm not familiar with, but is apparently very popular with little girls. This name has been very strong this year, but it still has a decent valuation and a nice 3.5% dividend yield. Going into the holiday season, how does it look from a trader's perspective?
This one looks a little bit better. You know, investors that have been sitting in this, they've been making money because it's been on the rise. And I would say if you look at the chart here, you will see that, you know, there was a big gap. And this is when, you know, I would have gotten excited about it because you had a huge gap here. We talked about when gaps don't get filled, there's power, there's pent-up momentum. And since then, you know, it's had a methodical move to the upside. You want to draw a line here also. Since that gap, it's been holding this trend line where you've been able to buy against. Okay, lately it's had like a 4-day pull-in. I don't think it's that big of a deal. The moving average is caught up. I think for traders, you know, you probably get involved if it breaks above this, just say 36.20. You know, but as an investor, I would say you stay with it. You know, if it were to break this trend line, you know, you could see a little bit of a shaking of the tree down to here, or maybe to retest this gap. But for now, it's holding just fine above 36. It gets some momentum, and you know, typically these things run before holiday season, so this could be a good time to have your eyes on it.
And one other note with Mattel is I think a lot of investors have been intrigued by Hasbro, its competitor. And even though this one's had a larger pullback, it's a little bit more vulnerable to cannibalization from digital games because it has a big board games business. So I would actually prefer Mattel over Hasbro, even though it's closer to its highs.
There you go.
So moving on to something that might be more in your camp, neckties and dress shirts. PVH, maybe more interesting to you than Barbies.
You think? About Rocky dolls.
Yeah, sure. Yeah, you run up the Philadelphia Museum steps every morning, right, after your egg yolk breakfast. Anyway, PVH is a really great retailer. It has a very international business. We know it's Tommy, we know it's Calvin. Manny Chirico, the CEO, has come on Mad Money a number of times, including earlier this month. another name that has a big run, but it has a big international presence, which worries some investors. Again, does this look like a nice...
There's trades here. I'm looking at the chart, and I've heard it on the floor here and there. And if you look at the chart, you will see that at least when it moves pretty well. And if you look here at the downtrend, this was a nice trade right here when it broke above this channel. Then it flagged and continued, and then it gapped up. It gapped up, and the way I like to trade these things is if this gap stays intact, which it looks like it's trying to, you're going to see the momentum continue. If it starts to break below this area, which is just say 91.69, it could be vulnerable for a little bit of a pullback. So at this point, I think the momentum's there. It's holding the gap. If you were in, I would say stay in tier 1, and if you're looking for a trade, it's really going to have to start getting above this resistance. So as of right now, still looking healthy. Let the moving averages catch up. Could continue to go a bit sideways for a trade and a breakout. It's got to trade above 95.41 for traders to get in there. As an investor, you've been rewarded, and just I would say keep your tier size down and just make sure that if you don't have a stomach for a bit of a correction, that it holds above this gap, and that was where I would put my stop.
Great. And I guess now handbags, which is more in my camp, Michael Kors, which has been a very hot stock. It's moved up considerably this year, even hasn't had much of a pullback after a share offering earlier this week. This has been the glitz and glamour and aspirational luxury play. It's a little bit steep up here, but it's continued to move up. And we talk on Mad Money a lot about junior growth names where the EPS projections aren't really reflecting the full story.
Right.
So
with this one, my traders have been all over this. I've actually talked about this one too, months ago. I've talked about how this could be one of the, I put 3 IPOs out there in the last year that could be something to have big gains longer term. Kors was one of them, LinkedIn, and Dunkin'. And, LinkedIn went to new highs. Kors has been an unbelievable mover. You could have got involved with this so many different times. Right now, it's a little bit choppy. They did absorb that secondary. Remember, they upped their revenue, squeezed some shorts, and then they announced their secondary. So, there's a lot of games that go on Wall Street. But if you look at the chart, as an investor, if you look here, you'll see that it was unbelievable. You look at the chart right there. This is when it triggered after its new issue, and it really, never looked back until it started getting a little toppy around here. And this was after it already almost doubled. Since then, you had another nice gap here. We talk about gaps, and the reason why I love them is because you have points of reference to trade against. So you take a closer look here on Kors, and you'll see, this was another nice area to get involved, and then it triggered higher. And, I don't like to see like push through failures like this. This would get me a little bit, a little bit worried when you have a big up day matched by a big down day and then some follow through. So at this point, I think it's fine. It's holding this bigger support, but it is, I think, a little bit prone or vulnerable to a bit more downside to the 50-day. At this point, if you're an investor and you're looking to be in there for years, it's acting very well, and you've already had a nice run. But again, here, tier 1, and for a trader, I don't think traders are going to get much, very interested until it starts getting back above 55. Some guys might even be looking for a cute short for this support to break for it to get down to the 50-day.
So certainly Kors is a true Mo name. It's definitely had a big run. And if that nosebleed multiple and that big run is too much for you, a turnaround name in the retail space that we've looked at Mad Money on Mad Money many times is ASNA, which is the old Dress Barn. It has actually transitioned from just that Dress Barn brand to become a portfolio of brands. They own Maurice's, Justice, and they just bought Charming Brands, which is for plus size offerings. So this name, we had the CEO on Mad Money earlier this week. Again, here it's trading at about 12 times with a 15% long-term growth rate. Is it interesting or too boring from a trading perspective?
Well, something doesn't mean it's boring or you can't make money. Just traders can't look at everything. And when you think of retail, this is not something you think about trading. But as you look at the chart here, you'll see there has been action. When it broke this mini downtrend in August, it's methodically moving higher. It just tried to break out here, and it's had a controlled pullback. It's been following the 8 days, so it shows you there is some momentum money there. Looks okay from a technical standpoint. I think that you do get some sellers as it approaches old highs, but I would say as long as it's short term, if it could stay above this 21, I think it's definitely in the camp where it could see new highs on the year. It's pretty close and it's following all the rules, so this is something that should remain in your portfolio and on your radar.
Another big name, we're both back from Yom Kippur yesterday, Day of Atonement. on Mad Money, we did a Day of Atonement show where one of the names we looked at was Deckers, which we have moved away from recently, but not early enough. This name has had a big downturn. And we actually were joking that when Tom Brady signed on, that actually was near the top, that he signed on for men's Uggs, and it's been a little bit more of a fad. So,
right.
You know, are Tom Brady and Giselle contrarian indicators from a trader's view also?
Well, they could be. Well, if you remember, Giselle wanted to be paid in euros like 3 years ago, and I think that was the high of the euro. And then Tom Brady, I don't know what he was thinking, you know, a macho football player signing on to wear furry boots. But anyway, this stock's giving you multiple reasons to get out. It's had so many gap downs that never got filled during the course of the last year where, you know, at this particular point, maybe does it become a takeout target, but you can't play a stock just for a takeout target. So if you look here, you go to the symbols, or you look here at the chart, you will see, you know, the reason why I don't like breakout failures is just because of this. Look, broke out, failed, went lower, retested, and since then, you know, it had so many gaps that just when the stock gap's down, like just say like right here, and doesn't fill it, and people don't think it's on sale, it continues in that direction. Here, gap down, couldn't even fill this again, continues in that direction. So at this particular point, you know, I guess for a trash for treasures trade, maybe it bounces a little bit, but this stock is broken and it's been a much better sell than a buy. But, you know, to be shorted, I think, is playing with a little fire.
Well, furry boots is a good note to end on. It was really great to join for the first time today, and that was In the Trenches.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The two-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.